What is NFP or non-farm payroll, and why is it so important to us as Forex traders? In this video, I'm going to explain to you exactly what NFP is. I'm also going to show you how to read an NFP report. We're going to do that together. And also I'll give you some advice on whether you should actually be trading NFP or not. Now, NFP stands for non-farm payroll, and essentially what it is it's economic data that's put out on the first Friday of every single month at 8:30 a.m. Eastern. And what this data shows is it shows the strength or the weakness of the US economy by giving statistics on what's happening in the employment sector of the economy. Now, this is extremely important for you if you're a Forex trader or you're a stock trader. It doesn't matter. All markets around the world have their eyes on what's happening with the US economy. The US dollar is the world's reserve currency. Also, the US economy is the most important economy around the world. So all markets, not just the US stock market, not just Forex markets, stock markets around the world pay attention to this. The crypto markets pay attention to this. Any trader should be well informed of what NFP is and how it actually works. So like I mentioned, the NFP report shows the employment situation in the US. Now, the way that this is actually calculated is the non-farm payroll numbers are counted like this. It's the number of paid workers in the US economy, excluding government employees, private household employees, employees of nonprofit organizations, and farm employees. That's how NFP is actually calculated. And generally, the most important statistics is how many jobs are gained or lost in the US. And this is an important metric that shows the overall strength of the US economy. So let's go in and let's actually take a look at a sample report here so you can understand what it looks like and how to read it. So the one thing that you'll notice with NFP is there's something called the consensus. And the consensus essentially is what is expected or what is the projected. And then there is also the actual numbers, which is the actual statistics. Now, the differential between what's expected and what is the actual is generally what causes the market to move and why people position their trades the way that they do. So let me explain this. So right here, we can see the NFP actual consensus and the deviation. So what are the real statistics, what was projected, and what was the deviation? So it says the US economy added 315,000 jobs in July, better than the 300,000 expected jobs that were supposed to be added. So this was actually a positive news event, which is a strong sign that the US economy did well in comparison to what was actually expected. So generally, US dollar markets or markets involved with the US dollar, which are almost all markets, the US economy is showing strength, so the US dollar should show some strength as well. Granted, there's not crazy amounts of money printing or other things that are happening, but this is just the general way of how NFP is actually written. The other important metric that comes out here is the unemployment rate. Okay, so it says that the unemployment rate slightly increased to 3.7%, which is a bit higher than expected. So this is a negative metric, right? The unemployment rate was supposed to be something, and it came out a little bit higher than expected. So this is a negative deviation from what was expected. The other thing that you can see is the labor force participation rate. You can see that it's slightly increased to 62.4%, and you can see the average hourly earnings. Now, I would say that this is the most important metric, and then secondly, unemployment, and then probably third, labor force, and then fourth, average hourly earnings. You can see that the monthly change in wages came out to 0.3% worse than expected, while yearly wages remained unchanged at 5.2%, slightly worse than the 5.3% expected. So this is great and all, but what does this all mean, and how do we actually make trading decisions based around it? Well, should you actually be trading the NFP news or FOMC, which is another major news event that happens each month? And I think that it's safest to stay out of the market, and here's why. What happens around the time, like a day leading up to NFP release, generally people start pulling their positions from the market. And they do this because they know that once this data releases, the markets can get really volatile and it can stop you out of your positions really simply. And also, we'll notice that not only does the market start to really, kind of flatten off and not do a whole lot, but the hours leading up to the event, we see people starting to take positions and we see the market starting to get a little bit more choppy at this point. And then once the release actually happens, the first Friday of the month at 8:30 a.m. Eastern, generally see like a lot of big movement in the market, a lot of volatility, a lot of people taking positions, trying to speculate and trying to take trades based on what the data was in comparison to what the projected data was. And so a lot of the times during this period, we can see a lot of these strong whipsaws and a lot of these, crazy volatility that happens right around the release of NFP. Now, because a lot of people prior will pull their positions from the market, a lot of the times the liquidity really dries up in the market, which causes the spreads to increase. So this is an unfavorable trading condition while your spreads are increased and there's these crazy whipsaws that happen a lot of the time. Generally, I think that if you're on a lower time frame trading, then I generally think it's safest to just stay out of the market. So in conclusion, NFP or Non Farm Payroll is a report that comes out the first Friday of every month at 8:30 a.m. Eastern that shows the employment statistics in the US, which is very important for markets all around the world, as the US is the reserve currency and also has the most important economy in the world. If this video is helpful, then go ahead, like, subscribe, and turn on the post notifications. And feel free to check out some of our other helpful videos on this channel.